Alright, hello guys. We've been live for about 2 minutes here. I think the audio is fine. Hello guys, hello. I see the likes there, awesome. Hey guys, so if you guys are new here, make sure you guys hit that like button down below, and also it'll be nice if you guys can hit that subscribe button as well, but you guys can choose to do that once the stream is over, obviously. You guys can make that decision to whether or not you want to subscribe to the channel. But yeah, we're almost at 650 subs on the channel too now. So again, we're really getting there. Maybe we can hit 700 subs before the end of this year, I think. And possibly even head towards that 1,000 mark on the YouTube channel here. Alright, well, let's begin here. I think people are slowly starting to get the notifications that we are live on YouTube. Okay, so as you guys see in the title and in the description box, we're going to be going over the... Well, actually, we're just going to be doing a very deep technical dive on the markets and the market volatility, since I think it's going to be very crucial for the next short to medium time frame here for us. And so this should be a very insightful and applicable live stream as it is with everything else, but most importantly because of the fact that I'm solely going to focus on the technical analysis of the markets. Okay, so please watch until the end of the stream. Everything that I say tonight will be very important. Okay, so let's first begin with the S&P 500 ETF, or ticker symbol SPY. Alright, so again, if you guys look at the index only, so ticker symbol SPX, you guys can just simply relay and overlay the technical analysis that I'm doing on SPY onto SPX as well, because again, they why wouldn't they move in the same way? I mean, it's S&P, right? So they're both the S&P. So okay, so let's first begin with the daily time frame for the S&P 500. So as you guys have been seeing, and hopefully I've made it very obvious to your naked eyes, there is a current divergence that is happening, right? And that has been happening. But so far, that divergence is slowly turning into convergence, and I'll tell you why. So first of all, this divergence was on the fact that the price action compared to the RSI or the relative strength index has been showing this key divergence here, where we're seeing lower highs and lower lows on the RSI. So let me actually make it even more evident here. So oops, I'm gonna bring the... Hey, what's up guys? Hello. Ooh, welcome everyone. Hello. See more people coming in. So okay, so this is a very large arrow, right? So this clear downtrend for RSI, right? And if you just take a look at just simply the price action on the S&P 500, right? Clearly, right? Higher highs and higher lows. Okay, so that's the key divergence. That's the main divergence that I wanted everyone to see months ago. Okay, and this has been we've been seeing this for what, the past 4.5 months at this point now, almost 5. So that's great, right? However, this divergence hasn't really resulted in any type of a bearish move or a correctionary move to the downside to officiate this divergence, and eventually that downward pressure and downward move will get us out of this divergence as well, which is my next point, right? And we're almost at that convergence point already. Why? Well, first of all, we have been making lower highs, okay? And we know this because last week, okay, so let me make sure that I saw this correctly here. Yeah, so last week we've been trying to make lower highs, and we've been doing that so far in even the two previous weeks here as well, right? So here is the current all-time high price print right on this daily candlestick, and then we have the next lower pivot high point right here on February 11th, and presuming that we don't make another higher high this week, obviously that's a little too early to tell because it's only Monday, we have the next previous pivot high point sitting at right here, so last Friday's high of the day. Okay, so we've been making lower highs. Now we have yet to officiate this lower high pivot or slash trend, because we're continuously almost making lower lows. And what I mean by that is, well, if we take a look at these two pivot low points, okay, they're off by 1 single cent. So on the low of February 5th, right, the low of the day, LOD, the price print is at 675.79, and then the low of this daily candlestick on February 17th, okay, the low of the day, LOD, was at 675.78, right? So this is still 1 cent higher and does not confirm a lower low pivot point, unfortunately. And it would have been great to see February 17th being the actual lower low, because that would have given us the typical start of a reversal to the downside, right? And that would give us that new trend to the downside. So it would be giving us something like this, right? However, what we got was actually this, right? So we actually had a slightly higher low, right? So this is now not a downtrend, but still a consolidation trend, which means we're still in a sideways consolidation. And that's the reason why I titled the stream, right? What should we do about this specific sideways consolidation, this sideways stock market, as you guys see on the live stream there, right? So, you know, to me, this signifies that the sellers are present, right? Are present at some specific supply areas, some specific resistance areas, but at the same time, okay, simultaneously on the other side, we're seeing buyers still present at the specific demand zones or demand areas or support levels, the significant support levels or areas, right? So what does this all indicate, right? Because what should we be expecting, right? Well, first of all, we need to be expecting the true reality here, right? Frankly speaking, that we are most likely not going to be seeing any type of a specific trend break to the upside or to the downside yet, until this sideways gridlock is resolved. Okay, and just based on the market analysis alone, the technical analysis alone, it seems like we can't do anything. We can't do much, all right? Because it's still going sideways. Right, we didn't see that preferred break to the downside. Again, why were we preferring this break to the downside, where we have, again, higher, the first higher, well, this is the current all-time high price print, and then the first pivot low point, and then the second higher low, lower high pivot point, and then an ideal lower low pivot point. But again, we didn't get this, right? So the reason why we wanted this was that we were getting this divergence of the RSI, a very key technical indicator that everyone loves to use. Again, it's a lagging indicator, but nonetheless, it's a very established indicator that people all watch, right? When you have hundreds of thousands, if not millions of people watching this indicator on SPY, right, it makes it a pretty significant indicator to look at, even if it's a lagging indicator. But anyways, the reason why we wanted this sideways consolidation trend in the markets to end and resolve to the downside is that, well, we've had this divergence in the markets, right, with the price action and this technical indicator, the RSI. So the fact that we didn't get this, right, and just like it says on my thumbnail of the stream, right, a sideways stock market, and then the title of the stream, what can we do about this, right? What are the next steps here, right? So first of all, we had to take this day by day, week by week, unfortunately, right? And there's gonna be a clear answer here in the next couple of minutes here, but I'm not gonna get into that just yet. But I'm just solely speaking from a technical analysis of the overall markets here. We need to pay key attention to key levels, and I've already established 3 specific levels, and obviously it's not 4 if you guys are seeing what I'm seeing here, but I gave you guys 3 specific levels in the past, okay? And that was 686, 675.50, and 670. I think I gave you guys these levels back in November. Yeah, it was either late November or early December, okay? So I gave you guys these 3 levels. But now we have 4 specific levels, right? 694 to add on to the 3 levels that are below this specific all-time high level. Okay, now the reason that I don't have 696 as a level or even 697, because again that would make a little bit more sense from a technical perspective, is that, well, first of all, we've been making lower highs, right? So I'm gonna presume or assume at least that we're not gonna be getting back to this higher or upper areas of supply. Why? Well, again, the balance right now with the markets is that we have an equal weight of buyers and an equal weight of sellers, right? So whenever we reach, or when we have, well, actually, let me actually say that again, or actually let me change my words here. So whenever when we have broken a specific demand area like we've done so far, right? We have, for example, 686 has been broken multiple times here at this point. It's going to be a lot harder for the bulls to try to reclaim a previous resistance area and turn it into a new area of support, or maybe use it as support again, right? Because well, there's a lot of sellers at that area now, right? At that previous area of resistance. And so I'm assuming that the price wouldn't be able to get back to 694 or even 697 here, this true all-time high resistance level, and that's the reason why I'm not using it. Okay, so again, if you were to retest 694, right, and maybe this week or even the next couple of weeks or next couple of trading days, or maybe just next week, I would say, okay, well, now we can use the 697 level because buyers have been able to retest this level and maybe even now have turned it into a new support level by crossing over it and staying over the 694 level, right? So you have to be constantly, switching and going by how the live price action is moving, right? You have to change your thesis and change your overall technical sentiment and bias based on this live data that we're getting off of the actual market open price action. Does that make sense, guys? Hopefully. If anyone's there. Oh, okay, I see you guys. Okay, so I think it really makes sense where in a sideways market, that's exactly what you guys do. Nothing said. Yes, sir. Okay, perfect. So it really makes sense for you to be thinking in this manner, right? Where you have to have these specific significant levels, right? You don't want to be inundated with intraday levels. You want to be looking at the higher time frame levels like the daily, the weekly, and the monthly. And all of these 4 levels that I've drawn here, as the market consolidates and moves sideways here, all matter on every single 3 of the major higher time frames, which is the daily, weekly, and monthly. Okay, so that is where we're at now, right? That's exactly where we are at right now with the levels here and the trend. Now, okay, so here is where we can get a little bit more of an insight as to what the underlying market action is saying, and that is the overall market fall. And we can take a look at that through the VIX, right? The volatility index of the S&P 500, right? So first of all, just solidify in your heads that the markets have been moving sideways for a few months, okay? And now when we go over to the VIX, okay? The VIX has been in an uptrend since late December and for all of this year. Okay, let that sink in your head. Okay, and not just on the VIX. If you want something that's a bit more forward-looking here, take a look at the VIX futures. Okay, and this is VX. Okay, so VX has been moving upwards for this entire year, and 2, it has been contracting as if it's about to have a big pop to the upside and have a big expansion in market vol, right? So the VIX and the VIX futures is telling a different story to what the S&P 500 index, right? SPY and SPX. And that is where things become a little bit more cautionary for us if anyone is wanting to be bullish, because when the market vol is acting like this, where it's, number 1, simultaneously moving to the upside, and number 2, also contracting while it's having an uptrend, right? That's something to watch out for the immediate future, right? Because first of all, obviously my SMAs don't really matter, but obviously the SMAs are formed based on the action of the candlesticks here and the price on VIX futures. They're all pointing up, right? So this in itself, compared to comparing the VIX futures and the VIX to the S&P 500, obviously they're gonna move in a converse way, right? Sorry, in a conversely way, right? They're moving the opposite way. The fact that they're diverging like this, right, where one is clearly in an uptrend and clearly contracting, while one is just simply in a neutral trend, moving completely sideways, something's up, right? Something is going on here, right? And we need to be on alert as to how this uptrend and current contraction of VIX futures resolves. And everything is pointing for an expansion in market vol, a very quick big pop in market vol to the upside. Okay, and yeah, of course, this could all just be a fluke here with the VIX, right? The fact that we were just seeing just brief bursts in expansion that eventually led into an upward contractionary movement of the market vol, and that has allowed the markets to move in a sideways manner to the point where it can actually negate the underlying market vol that has been contracting and moving to the upside for all year long, right? So far. And yeah, that's actually possible, right? Where the markets can actually neutralize this potential market vol expansion by just simply moving sideways. Okay, and that might be hard for some bears to hear, or maybe for bulls to hear. Who knows, right? So maybe some bulls are just been waiting for a very quick correctionary move to downside to buy the dip. Who knows, right? But either way, it's not making any side really happy at this point, right? For months, we've been just moving sideways without an actual resolve to either direction, right? There's no net direction of move to the upside or to the downside. So when you take a look again at the VIX, okay, again, the warning signs are there, but when you have a sideways market like this that's so strong to and the fact that it's yearning to be moving sideways, obviously there are a bunch of underlying reasons, like these massive sector rotations that we've been seeing that have led into this sideways market, but not going to talk about that right now. But this VIX movement and this divergence away from what the actual markets have been doing is clear that at some point this sideways market and this contraction and uptrending VIX has to resolve very, very soon. Okay, and personally, right, I have this bias, obviously, because based off of VIX alone, that we could be seeing a very brief and short burst in an expansion of the VIX, right, in market vol that will probably subsequently lead into a very quick contraction back down in the VIX, right? So something like what we saw in mid to late November here, okay, or even back in mid to late October. Okay, so that's kind of what I'm leaning towards. But then again, I also can't forget that the markets can move sideways into the end of time to completely subdue this potential expansion that the market vol could experience. Okay, so again, quick summary, right? I'm personally leaning towards an expansion in the VIX, but there is still a huge chance that the markets can just move sideways and just frustrate as many bears and as many bulls, right, on both sides, and frustrate them to the ends of the earth until the VIX actually dives back down without having a single moment of expansion. Does that make sense? Let me know if that makes sense. Okay? Perfect, yeah. Awesome. So, with that being said, let me show you guys what I showed my members in this week's CFO Swinger Watch Report. I'm not going to give you guys a sneak peek at the CFO Swinger Watch Report this time around, but let me actually give you guys a quick look as to a quick history lesson, actually. So we have to go all the way back to the 2010s. All right, because in the 2010s, in mid 2010s, the markets did something very, very frustrating for both the bulls and the bears. So for over a year, almost a year and a half at this point, okay? So from December 2014 to June 2016, okay, the markets didn't do anything. There was no trend. Do you guys see here? All right, let me bring this up. Okay, so from December 2014 all the way up into June 2016, okay, the markets didn't do anything. All right, and yes, these are monthly candlesticks, by the way, right? Each candlestick represents one month's worth of price action. There were brief moments where we had these very large, big pull downs, right? These big correctionary moves, okay? And yes, they're corrections if you combine these two red candlesticks, right? And these two red candlesticks as well, or even just all these two, from the highs to the lows, right? From the highs to the lows, right? So anyways, right, I'm not gonna get too specific on that. You guys understand what I'm saying, right? The gist. For most of the beginning of 2015, the market just went sideways, right? It looked like it was building a nice ascending triangle bull flag or a nice bull pennant, but it ended up with a nice big contractionary move in late summer, or I guess mid to late summer, right? In the mid to late summer months, or mid to late quarter three. Okay, so to me, this is something that can actually happen. Where again, as I mentioned earlier, the markets can just move sideways, right? Until it completely negates the potential contraction that VIX is that the overall market vol, or the VIX, is experiencing right now, right? And we have to take into consideration that this could occur, right? And we can have an actual VIX expansion randomly later on in this year, right? That's a real possibility. Why? Because it has happened in the past, right? And even if we've had these brief 2 month, right, or maybe even 3 months here, as seen in these 3 monthly candlesticks, right, and later in the year into 2016 and into early 2016 here, we can have these brief periods of pullback or correctionary moves, but they could still end up leading nowhere by the end of a fiscal year and into the beginning of a new fiscal year, like we saw in 2016. Right, even the year after 2015, the markets continued to move sideways until finally, at the beginning of I think quarter three of 2016 is when we had the actual breakout. Right, so from July to August, or July to September, the markets finally made progression after showing no trend and zero performance, right? Zero trend for about a year and a half, right? So this right here can happen. And during this entire time, right, we're seeing massive and continuous flippant sector rotations, right? Massive rotations from growth and momentum to value and defensive constantly, right? So again, this is something that you guys should understand why I'm also showing you guys, or I guess this is a good analogy here that I'm showing you guys from late 2014 to mid 2016, right? Because this can actually occur just activity that both bidders and sellers will not welcome, right? But it can happen because it has happened in the past, right? And if you take a look at the VIX as well, let me actually give you guys another look as well with the VIX, right? Look at what the VIX was doing. Obviously a little bit more calmer here, but since the markets were in a huge recovery, secular bull market after the great financial crash in 2008 and 2009, right? So just take a look right here, right? So from December 2014 all the way up into, let's see right here, right there, okay? The VIX was showing pretty solid contraction, right? So at some periods we were forming, we were moving up, right? Just like we saw in from December to February, and obviously February is when we went back down. But this could happen, right? And again, remember for SPY from December 2014 to the early months of of 2015, the market just moves sideways. So this can happen, right? The VIX just gets crushed from sideways action where there literally is no trend, right? There's no volatility in the markets because it's just moving sideways. So this is a clear example, a clear-cut example and analogy that you guys should remember from the stream, right? And again, hopefully this is very insightful information and very much applicable, because this can happen, right? Obviously, I don't want that to happen because again, I'm a little bit biased based on the divergences that we've been seeing on the markets. Obviously, we're not seeing the significant divergences that we saw in 2015, in 2014 to 2016 here, right? Or at least, let me actually just give you a specific time frame. So the VIX was already contracting from 2014 of October to, so from October 2014 to January, 2015, right? So it was making a nice wedge here, like what we saw, well, like what we're seeing now, actually, right? But actually, I showed you guys that earlier. You guys should know what that looks like. It looks like a little wedge, right? But on February of 2015, that resolved to the downside, right? And guess what? On the February of 2015, okay? Look what happened to SPY, right? What happened in February of 2015? Nothing. It just went up, and then we just moved sideways from that point forward for months. For months, right? March, April, May, June, July, and then something happened, right? So this can very much happen, right? Although I don't want that to happen. I would much rather see an early resolve of the VIX. This current contraction that leads into a very short, brief burst in market vol expansion. Does that make sense, guys? Hopefully. All right, I see you guys' reactions there. Okay. All right, so that's literally a very good deep dive, and what you guys should be doing as well. Hopefully, you guys get a little lesson out of this too, where you guys go back and try to find periods of similar market action as we've seen here. So, I think it's pretty important that you guys see that there's a lot of analogies that you guys can look in the past, okay, and you guys can just gain a lot of insight, to be honest with you guys, just based on looking at previous action, right? And I know people say you can't rely on previous actions, right, and previous price history, because it's not like we're gonna be seeing the exact same, right, price action today. But again, you have to be armed with knowledge, right? And the only way to be armed with knowledge to be able to apply to the current action, to the current analysis that you're doing, is by, again, revisiting the past and historical price action, right? So yes, I know that previous price action does not equate to a good analysis of the current present time, but it can give us a lot of good analogies, a lot of good lessons that we can draw from to give us certain possibilities that could occur in the markets, right? Does it make sense? Hopefully I worded that correctly. Okay, my audio is still going well there. All right. Okay, I see you guys' reactions. Awesome. So yeah, I mean, that's essentially it for the markets. Okay. I want to go over a specific ticker now from this week's CFO Swinger Watch Report's MM list, so the momentum mentions list. Okay, and that is SEDG. Okay, so hopefully it loads. Right. So overall, solar has been actually one of the few groups that. Well, okay. So before I get too biased here, solar overall has been looked upon as a cyclical and a growth group. Or it depends on what the economy is doing and what the interest rates are and the interest rate environment. But I would say right now that although most people might disagree with me here, but solar is actually, I think it's transitioning back towards into a growth story at the very least, right? If you guys don't want to consider solar as a growth group, because of the fact that they're so sensitive to interest rates, right? But anyways, so solar, right? It's part of the energy sector, right? It's part of the energy sector, and also it can be part of the tech sector as well, obviously, due to this is a technological revolution, kind of, since we've had solar panels for a long time in the 1900s, mid 1900s, but solar here, I think, has a chance to really reclaim new uptrends for this new year. And let me actually just read you guys what I've written down here for this week's list, right? So I said, rates are potentially going to fall again this year, okay, which I think they are. They could be saying, well, at the very least, we can be back to seeing the Federal Reserve acting on the benchmark interest rate, and that action could be a rate cut, right? Hopefully. So, that's why I'm saying that we could potentially be seeing rates decreasing again. So, again, I gave another reason here, especially if the economy begins to contract rather than become stagnant, right? Because again, stagflation is still at the forefront of the current issues that we're seeing in the overall economy, right? Especially with the labor market and the current reflation that we're seeing, right? Of inflation, right? So, and that means solar will be right back on the forefront of things because they are sensitive to interest rates. As seen here, SEDG has been making a huge macro cup and handle chart pattern on the weekly time frame. So post earnings, the handle right here, right, seems to be done forming as volume has spiked last week. And obviously the reason why it spiked is that there was earnings, and then eventually there was that post quote unquote late reaction to earnings. Because again, what I mean by that is that we had an initial big gap up jump on earnings, and sometimes impatient investors, or maybe people who have been holding at these lows, they decide to finally get out after reading this recent quarterly earnings report, and they get out right on the first open of this gap up. But then we might be seeing, well, now we might be seeing, we have it here now, we have the evidence here, but as we saw last week, right, right after the earnings reaction here on Wednesday, and a couple days after that on Thursday and Friday, right, we're seeing new people that are jumping into this stock now at these quote-unquote discounted prices. Obviously, it's not really discounted prices because we saw these prices back in August of last year, back in November of last year, and now January of this year, right? But anyways, maybe these investors, these new buyers, reread the report for these quarterly earnings report. They're like, oh, hey, I like what I'm seeing here. And again, I was one of those few people, or many people out there. I don't know how many people read the report, but things look pretty solid, right? And obviously the macro factors can be put into that overall analysis, this technical analysis that I'm seeing here. But I liked it. I like what's going on with the company, and potentially from a macro perspective, we could be seeing solar gaining back that momentum and energy that it needs for solar to actually gain a foothold this year after falling for years, right? Since I think like 2021, mid or late 2021, all the way up into the beginning of 2022. Yeah, the beginning of the bear market. Right, I believe that's when solar really got completely pushed down a hole, right, without looking back. So, yeah. So, as I said here, all right, plus with the overall energy sector moving higher, there's yet another chance that momentum starts sliding into the green energy group like solar. So, if you guys didn't know, there's kind of this internal rotation that also occurs within the energy sector. And usually when we see oil and gas names, so again, please write this down. Again, tonight's stream is very important, right? Like as it is with every other stream that I do, but specifically because I'm giving you guys kind of my own analysis, well, like I usually do, but I'm saying my specific analysis that I like to do for myself, right? And relate to my readers as well. But now I'm doing this for the entire public here since this stream is public. But this is how I look at things, and this is how I interpreted things based on what the markets have been showing me for the past 8+ years, right? So with that in mind, I've noticed that the energy sector tends to show, well, first of all, when we think about, actually, let me give you guys a question. Let me ask you a question. When I say the energy sector, what do you guys think of immediately? Like right away, if I say energy, you guys would think oil, right? Oil, natural gas, right? Liquefied natural gas, right? LNG. Most recently, that's the most popular type of natural gas, right? And it makes sense, right? So Wall Street thinks in a very similar way. So whenever the energy sector gains bullish momentum, oil, nat gas, or natural gas, or just any type of gas companies, gets the initial bump of that bullish momentum, sentiment, and volume. And then once we hit a certain intermittent high off of the oil and gas names, we tend to see that momentum and volume and sentiment weaning off of oil and gas names, and they begin to slide towards, so again, that internal rotation towards greener energy names like solar, hydropower, right? And geothermal sources, right? Stuff like that, and biofuels, right? So we start to see this rotation, and I think based on that internal rotation analysis alone, we could be seeing solar gaining a lot more momentum now as we head into the middle of this year, right? So again, so far oil and gas names have skyrocketed if you guys haven't been paying attention to the energy sector. And so once that kind of energy declines, right, that momentum and that bullish sentiment declines, that can head towards this solar group, right? And we can see solar getting a lot more traction again, and specifically for tickers like SEDG, we can be seeing huge mean reversions back to the upside. And again, there's a lot of supply on SEDG. I've shown this name multiple times in the past, but massive supply overhead. I mean, just take a look at the monthly time frame here, right? This is an insane chart, right? So it made a huge mountain and a huge mountain peak, and it came crashing back down to earth, and it came right back down to the IPO lows, right? And it held the IPO lows, made a new all-time low in the same process of bottoming out, and now it's trying its best to get back to previous highs, right? But again, there's a lot of overhead supply. So now, even on the monthly time frame here, right, the RSI is showing pretty solid RSI, right? This is a midline RSI, and midline range is from 40 to 60 values on the RSI, if you guys didn't know. So I would assume that on a monthly RSI, I would expect the RSI to be about 50 once it decides to top out on a mean reversion move to the upside. So that could be anywhere from 50 to 58, right? I'm just predicting here now. This is all assumptions here, presumptions on where the price can go if you were to see a mean reversion and a nice a mean reversion off of a breakout from a nice cup and handle chart pattern. Okay, does that make sense, guys? Okay, so that's my entire technical and almost a fundamental perspective and analysis on SCDG and just the overall solar group as a whole. Okay, so I really hope that you guys can have the solar group in your mind and your watch lists for this year. I think it can really be a pivotal year, especially from a macro perspective, if you start to see the entire energy sector weaning off of the oil and gas momentum, and that momentum transferring that internal rotation into the cleaner energy group, which again has been eating up market share. Actually, if you guys didn't know, solar has been getting cheaper and cheaper. All the other green energy sources have been becoming cheaper every single year, where at some points and some different countries around the world, actually many countries around the world, solar energy is actually becoming cheaper to use than oil and gas, right? So, you know, I really think that also for the fact that when rates are potentially going to fall again this year, again, I am thinking that whatever action that the Federal Reserve takes, it will be very, very stringent on whether or not that they believe that the economy is actually contracting. Because if you guys remember, last week we had the fourth quarter GDP report come out, and that was a doozy, right? Obviously, we had the government shutdown and other factors to put into that value, that huge drop that we had of the GDP from quarter 3 to quarter 4. But still, right, if this is going to be the pattern of the GDP, there is fair room to assume that we can be seeing the textbook back-to-back 2 negative quarters of GDP, right? And that will essentially give us that textbook definition that the economy is in a recession, right? It's contracting rather than actually being stagnant, right? And you know what? That actually might be better for the Federal Reserve, right? Because as I've been saying for actually all of last year, I mentioned stagflation in late 2024 too, but all of last year I was saying that the Federal Reserve is most likely going to be on the topic of stagflation behind doors, closed doors, even if they don't want to say it in public, like with their speeches, right? Whenever the Fed members are speaking or making an opening statement, or when Jerome Powell is speaking at his news conferences once the FOMC meeting is over, right? Etc. Even if they're not telling the public, or the American public, that of their fears of stagflation, I'm pretty sure they've had stagflation as a major topic. So maybe 2 quarters of negative growth, of negative GDP might just be something that the Federal Reserve might welcome at this point, right? Even if they've been orchestrating so hard to have a soft landing for the economy, but now it's becoming, well, not just that, not just becoming, but it actually looks like we're trying to aim for a hard landing, right? And we can actually be seeing an economic contraction, and maybe that just might be what they needed to make a solid decision to decrease rates, to stir up the economy, right? And have a reason to actually decrease rates. Okay, so yeah, that's kind of the reasons why I want to take a look at solar. It's a very surface level perspective. Obviously, I'm not gonna, I don't have as much, knowledge on the technical stuff on solar, but that's kind of my own personal ideas and reasons why I think you guys should be looking at solar this year, right? And into 2027. There's a lot of reasons to be very bullish on solar. So yeah, have at it. All right, so yeah, that is it for tonight, guys. I've been live, let's see, for about 45 minutes now, so hopefully you guys had some good information that you guys can take away from this tonight, and hopefully you guys can apply it for this week's trading and maybe into the end of this month, or end of this quarter actually, since at the end of this week it's going to be the end of the month. All right. Okay, so I'll see you guys on Wednesday at the same time at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. Make sure you guys join me at that time sharp. Okay? Alright, so good luck, and thank you guys so much for staying and watching until the end. See you guys.